Hi there, I'm Ryan Chan, CEO and founder of UpKeep, bringing you key insights about IRS regulations for maintenance. In this video, we'll be breaking down the complex world of deductibles and capital improvements, and explore how they impact your maintenance or operations team. We'll also dig into how a computer maintenance management system, also known as a CMMS, like UpKeep, can help streamline your operations and save you money. So if you're ready to navigate IRS rules and potentially improve your bottom line, stick around. Please note that IRS rules are subject to change, and a good CPA may be your best reference. For complete IRS rules that apply to maintenance, check out IRS Publication 535. Let's start with deductibles, specifically repair and maintenance costs. Amounts paid for repairs and maintenance to tangible property can be deducted if they are not required to be capitalized. However, a business may elect to capitalize amounts paid for repair and maintenance depending on their internal policies. Accounting and tax specialists review both minor and major repairs made to capital assets. Minor repairs may be deducted immediately, and major repairs or improvements may be depreciated over time. Depreciation is the process of spreading the cost of an asset over its useful life. This method of recovering costs is used for tangible assets like buildings, vehicles, and manufacturing equipment. Next, let's look at retired asset removal costs. If you retire and remove a depreciable asset in connection with the installation or production of a replacement asset, you can deduct the costs of removing the retired asset. However, if you replace a component of a depreciable asset, capitalize the removal costs if the replacement is an improvement, and deduct the costs if the replacement is a repair. Barrier removal costs are another deductible. Businesses can deduct costs of making a facility or public transportation vehicle more accessible and usable by those who are disabled or elderly. There are limits to the amount that can be deducted, and the barrier removal must meet certain guidelines and requirements under the American Disabilities Act of 1990. Now let's move on to capital improvements. The IRS provides ways to determine whether repairs should be deducted or classified and depreciated over a certain number of years. A unit of tangible property is improved only if the amounts paid are for betterment, restoration, or adaptation of a unit of property. Betterment includes amounts paid to fix a material condition or defect that existed before the acquisition or arose during production of the unit of property. Amounts paid for a material addition like a physical enlargement, expansion, extension, or addition of a major component to the property. Amounts paid for a material increase in capacity of the unit of property, and amounts paid that are expected to materially increase productivity, efficiency, strength, quality, or output of the unit of property. Restoration includes replacement of a major component or substantial structural part, recognition of gains or losses and basis adjustments, deterioration to the state of disrepair, and rebuilding to like-new condition. Adaptation involves paying to adapt a unit of property to a new or different use if the adaptation is not consistent with your ordinary use of the unit of property at the time you originally placed it in service. Lastly, let's talk about the role of maintenance in finance. Maintenance can help finance keep track of possible deductions and capital improvements through detailed and timely communication, proper documentation and submission of records, and use of a computerized maintenance management system to centralize data. A CMMS, like UpKeep, can eliminate redundant data entry, provide easier accessibility of data to all involved teams, and reduce expenses by eliminating the need for additional asset management software. And that wraps up our overview of IRS regulations for maintenance. Thank you for sticking with us till the end. To recap, we've delved into IRS regulations for maintenance, explored deductibles and capital improvements, and how a CMMS like UpKeep can streamline your operations. If you found this video helpful, do subscribe to our channel for more insights. For an in-depth understanding of how our tools can help your maintenance and operations team, visit us at upkeep.com. Remember, staying informed is key to improving your bottom line.